What if I told you that the biggest obstacle to growing wealth isn't a lack of money, but a lack of time? In 2026, many of us are juggling full-time jobs, and the idea of spending hours researching stocks or managing investments seems impossible. But here's the good news: you don't need to spend endless hours to see your wealth grow. With the right systems in place, you can automate your investments and make them work while you focus on your career. In today's video, we'll explore the top 5 smart ways to invest while working a full-time job, no matter how busy your schedule is. Ready to make your money work for you while you work? Let's dive in. 1. The shadow portfolio, copy trading AI. In 2026, traditional stock research can be time-consuming and overwhelming. But thanks to advances in technology, AI-driven platforms have made it possible for you to mirror the trades of top-performing investors. This strategy is known as the shadow portfolio. The concept is simple. Rather than spending hours on stock research or trying to pick individual stocks, you use a brokerage that offers a feature called strategy mirroring. This allows you to automatically follow the trades of professional AI funds. Once you allocate a portion of your paycheck, the system takes over, executing the same trades that AI-driven institutional strategies would make. This technology analyzes real-time data and market trends, ensuring your portfolio mirrors the strategies of experts who use powerful algorithms and data-driven insights. The unique edge of this approach is its ability to provide active management returns while requiring minimal effort on your part. It's the perfect solution for anyone who wants to invest without dedicating hours to monitoring the market. The AI ensures that the decisions made are based on comprehensive analysis, minimizing human error and offering a level of sophistication previously only available to high-net-worth investors. The best part? You get the returns of an active strategy with the passive effort of an index fund. This is ideal for a busy professional who wants to see their money grow without having to become a full-time investor. The AI continuously adapts to market changes, ensuring your investments stay aligned with the latest trends and shifts. Over time, this automated approach allows you to build wealth efficiently and consistently without needing to become a market expert yourself. Whether you're a newcomer to investing or an experienced investor looking to simplify your approach, shadow portfolios offer an easy and effective way to leverage AI for substantial returns. 2. Employer-matched tokenized 401ks. Retirement planning doesn't need to be limited to the traditional, stock market-heavy 401k. In 2026, employer-matched retirement plans have evolved, and many modern companies are now offering tokenized 401k options that include private equity or venture capital funds. These types of funds were once available only to the ultra-wealthy, but now they're accessible to employees in a variety of industries. The strategy is straightforward: max out your employer match, but if your plan allows it, opt for alternative asset sleeves within the 401k that give you exposure to high-growth startups, private real estate, and other non-correlated assets. These assets are not directly tied to the fluctuations of the stock market, giving you more diversification and exposure to growth opportunities outside of traditional equities. By investing in sectors like venture capital, private equity, or even tokenized real estate, you unlock access to markets that are often more insulated from the daily volatility of the public markets. The unique edge of this strategy is that you still get the tax advantages of a traditional retirement account while gaining exposure to high-growth sectors that aren't impacted by the day-to-day swings of the stock market. This approach is particularly valuable in today's market, where traditional equities may face more uncertainty due to economic shifts. By diversifying your 401k with these alternative assets, you are future-proofing your retirement against the risks associated with market downturns. Moreover, tokenized assets allow you to have greater liquidity and transparency within your retirement plan. You can trade and monitor these assets with ease, making it simpler to adapt your portfolio as your financial goals evolve. By investing in tokenized assets within your 401k, you're setting yourself up for potential long-term wealth in a way that's perfectly suited for the modern workforce. This strategy ensures that you're not only building a more secure retirement but also positioning yourself to benefit from the most promising investment opportunities in the market. 3. Auto-staking your emergency fund. Most of us have an emergency fund sitting in a savings account, earning minimal interest. But in 2026, you have the opportunity to make your emergency fund work for you with auto-staking. Instead of letting your rainy day money sit idle in a low-interest bank account, you can now stake your digital assets and earn yield on them while maintaining liquidity. Platforms like Lido and Coinbase allow you to stake your assets and receive a liquid version of your money, such as STETH or similar tokens. These assets continue to earn rewards, which are distributed daily, but you can still access them quickly if an emergency arises, like a car repair or medical expense. This way, your emergency fund becomes a dynamic, income-generating tool, providing growth opportunities while keeping you prepared for the unexpected. The unique edge of this strategy is that your emergency fund no longer just sits there losing value due to inflation. Instead, it becomes a productive asset that continues to earn you money, even when you're not actively using it. By staking your digital assets, you can receive consistent rewards and let your money grow passively while maintaining full access to it whenever you need it most. This strategy ensures that you're not just holding on to cash for emergencies, but that cash is working for you in the background, growing steadily until you need it. Auto-staking allows you to optimize the value of your emergency fund, making it a source of passive income rather than a stagnant cash reserve. It's a powerful way to keep your savings working for you, regardless of whether an emergency occurs. 4. Skill equity investing. One of the best ways to invest while working a full-time job is to leverage your professional skills in exchange for equity in startups or small businesses. This is known as skill equity investing, and it allows you to use your expertise in fields like marketing, human resources, or legal services to gain ownership stakes in growing businesses. Platforms like Mainvest and AngelList have made it easier for professionals to connect with early-stage companies looking for both financial investment and expertise. Instead of simply giving money, you offer a few hours of consulting per week in exchange for a larger ownership stake in the company. This allows you to contribute directly to the business's growth while securing your equity. The unique edge here is that you're investing your professional surplus, the knowledge and expertise you already have, into building a high-upside, moonshot portfolio of early-stage startups. This strategy allows you to diversify your income and build wealth without having to drain your salary. By contributing your skills, you're not just an investor, you're an integral part of the startup's success, creating a unique path to both professional growth and financial rewards. 5. Automated sector rotation ETFs. In the fast-paced, AI-driven economy of 2026, some sectors thrive while others decline at a rapid pace. Keeping up with these changes requires constant monitoring of market trends, which can be difficult for full-time workers. But there's a solution: sector rotation ETFs that automatically shift your investments based on real-time data. These AI-managed thematic ETFs use advanced algorithms to monitor sectors of the economy in real time. For example, if the AI detects a decline in retail but a surge in energy for data centers, it will automatically shift your holdings to reflect these changes, ensuring your money is always positioned in the most promising sectors. The unique edge of this strategy is its ability to automatically adjust your portfolio without requiring you to keep up with the latest news or sector performance. This saves you the time and effort of constantly checking market trends, and it ensures that your investments are always aligned with the best performing sectors. With sector rotation ETFs, you can rely on AI to do the heavy lifting for you, while you focus on your day job. So, there you have it, 5 smart ways to invest while working a full-time job in 2026. Whether you're shadowing the trades of top-performing investors, staking your emergency fund, or leveraging your skills for equity in startups, these strategies will help you grow your wealth without requiring you to sacrifice time from your career. If you enjoyed this video and found these tips useful, make sure to like, share, and subscribe to stay updated on more ways to build wealth while balancing your busy schedule. Thanks for watching, and I'll see you in the next video.